Hey guys, welcome back to another episode of the Trading Edge video. My name is Akil Stokes. I'm a Forex trader, trading coach, and co-founder of Tier1Trading.com. If you guys are brand new, this is a weekend video that I produce taking you around the markets, showing you the best trading opportunities on my radar, and also providing a helpful lesson that will help you progress as a trader. Now, there are two versions of this video. There is the YouTube version, there is the Tier 1 version. The YouTube version, we try to jump right into a single chart, give a single lesson, and kind of get in and get out. Something that I've noticed over the years is that, when I do videos like this, which aren't in the true educational format, when you make them too long, what happens is a lot of traders, especially a lot of newer traders, which is our demographic on YouTube, a lot of them get information overload. So you're hearing this, you're hearing that, you're hearing that, you're hearing this, and it's just, it all floods your mind and you end up learning nothing. Very similar now that I think about it to Baby Pips. Baby Pips is a great source for new traders to learn different information, really almost all the information you need to know about the markets. But the problem is, one, it doesn't really teach you how to put it together in a way that's tradable, and two, it's so much information about indicators and price and fundamentals and this and that a lot of traders leave getting overwhelmed and they don't really have a way that they can practically apply it. And I don't want these videos to seem like that. So the YouTube version is short and sweet despite the long rant, and hopefully the lesson kind of marinates and sits with you a little bit more than looking at a million things. The Tier 1 version, whether you're a premium member or a trial member, is the full length version. This week we're going to start off by taking a look at news. I had a great question from Naomi about news events, about really understanding the importance and which ones to trade through, which ones to avoid, can they be back tested. So I do about a 10-minute lesson on how I use news and how I deal with it. And then we're going to jump into the full watch list. So I hope you guys enjoy. In advance, do me a favor, hit that like button. That is the best thing you can do to support this site. The second best thing would be to leave a comment. This has become a great place for newer traders to come and really find a safe place. Meaning they're not going to be trolled. They're not going to be made fun of for asking a simple question. It's a place where they can really get guidance and not have to worry about their ego being bruised. I guess not ego, but being teased and whatnot. So keep that up. That's all on you guys, and I appreciate it. All right, let's get into the video. Euro Aussie. I may have to shorten this list some. Some of these pairs are kind of okay, but Euro Aussie is a decent one. Now, Euro Aussie has been a really interesting pair. For the longest time, we've been in a situation. I think I've spoken about this pair a few times in the last couple weeks, but this has been a pair where, I didn't want to get bullish, I didn't want to get bearish, any of that stuff. But what we did this past week is we finally took out our structure lows here. You can see this red candle barely did it, but that's why we have rules, and it barely isn't in the rule. It's either it did or it didn't, and yes, it did. So we did achieve new structure lows here, which has me looking for potential short opportunities. So if we go down to the 4-hour chart, you're going to see something else forming as well. And who can point it out for me? Let's see how good you guys are. See how well your eyes have been trained. Who can point it out? Can you? We have a potential flag pattern forming, right? We have price action putting in this directional move here, and then we have a spike up, a spike down, a spike up, right? We have a consolidative pattern forming that is drifting in the upper direction. What I like about these type of flags personally, right? That breakout trading is something, it's something I see myself getting into more in the future, right? If I ever have time to focus on my own trading instead of just helping you guys, right? That's the next thing that I'd like to kind of tweak, because at this point in my trading, I can only trade breakouts in a very specific way. But this happens to be one of those very specific ways, because this flag pattern, which is a traditional breakout pattern, forms after a break and close below structure, right? So if we go through that IPDE process, for example, if we identifying the break and close below structure allows me to predict that we're more likely to continue lower, right? Now that I have that prediction in my mind, right, I know that this type of breakout, this type of bear flag pattern traditionally breaks out to the downside. Now how you see how everything is lining up on the same boat. If we were to get this flag pattern, say right at structure, then it's kind of conflicting signals, because I identify that price action has not broken structure. My prediction is that, you know, we're more likely to retrace up and get a little bit of relief, but not necessarily continue down. But now I have a flag pattern that says we're supposed to break out to the downside. So half my analysis is saying up, 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 bullish, bullish, bullish. The other half is saying breakout, 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 bearish, bearish, bearish. And we get into that weird situation where a professional trader does nothing, right? When all the signals don't line up, you sit there and do nothing. But as a rookie trader, it's one of those situations where it's like you kind of get paralysis by analysis, right? Well, it should do this, but it should do that. This is telling me this. This is telling me that. And again, this is another topic that I recently spoke to a trader about, and she was asking, you know, can you make adjustments to targets mid-trade? Meaning, if you are in a, let's say, a trend continuation situation, or yeah, let's say you're in a trend continuation situation like that, and you sell right here, and the price comes down here, but then it runs into resistance and resistance holds, can you then make the decision to say, okay, well, instead of shooting for target 2s, which let's say we're originally down here, I'm just going to take everything off because we've held structure? And my answer was no. I mean, technically you can do whatever you want, right? But my answer is no, because that is essentially a emotional decision. Now I know it can be rules based. You can tell yourself that if price action breaks right through, I hold it. I hold the trade and shoot for those lower targets. But the fact of the matter is, the problem comes from trading two different strategies and having two different mindsets. In this type of situation, right, when you sell right here, right, as a trend following trader, you're anticipating, this is your analysis, you're anticipating that price is going to break structure. Am I wrong? Right? Now, the way we teach it, right, I like to take a little bit off that structure because I'm not a true trend following trader. So you get a little bit here to kind of a safety net, and then you get your secondary at the extension. But a true trend follower is shooting for the next extension down. So you're betting that structure is going to break. And structure doesn't always break right away, right? In a perfect world, we'd smash through structure on the first move every single time. But, you know, we see stuff where price comes down here, we start forming maybe a descending triangle, kind of like in euro dollar, and then we end up breaking through. And that's still valuable to a trend continuation trader. Maybe it's taken the hard way to get there, but it still broke through. However, a counter trend trader has the exact opposite mindset. A counter trend trader is saying, I'm waiting for price action to get here, and I'm looking for a hold, and I'm looking to buy it up like that. And what used to get me into trouble is just bouncing around between which way I traded it, right? I kind of like this trader. Sorry about that, getting a phone call from the wife. Going to ignore it, which is probably a bad idea. But yeah, so if you guys don't hear from me next week, it's because I got in trouble and I'm no longer allowed to do YouTube videos. But going back to the thought here, where was I at? Old school Akil, blowing money. So I would be a trend continuation trader who would sell here, but then as soon as price action would get here, my counter trend side would kind of pop in and be like, well, Akil, structure held, we're going to see a reversal. So part of me was saying, think short, think short, think short, continuation, continuation, continuation. Another part of me was saying reversal, 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 right? Two conflicting signals. And what do you think I ended up doing? Well, I ended up doing whatever I felt like at the time. I ended up going back on my emotions, where it's more like, you know, well, I think this time we're going to break, so I'm going to hold it. And then the price action will reverse up. I'm like, God, man. So next time the situation comes, and of course we have recency bias. So next time I'm in the same situation, same exact trade, and we get down there and I'm like, okay, well, last time I thought we were going to hold and I took my trade out and price action did the opposite. So this time I'm going to keep my trade in. And then price action does the opposite of what I do this time. And I'm, oh man, I knew I should have taken it out. And then I'm consistently bouncing back and forth, making the wrong decision. And I know many of you guys have been there. I get emails almost on a daily, or messages on social media almost on a daily, of people saying, oh man, I had this trade and then it was supposed to do this and then I got out of it and then it did what I was supposed to do and I missed it. And then, oh, I had this trade and I thought I was going to do this and I held on to it and then it reversed me out. I knew I should have gotten out. And it's if we're trading based off of those emotional signals, we're always going to lose. Right? We're always going to lose. I'm telling you right now, you're going to lose. There's no ifs, ands, or buts about it. I am 100% confident. If you are an emotional trader, you will lose because there's no way to quantify your decision making. So you can trade both scenarios like this, but it has to be rules based. You have to have clear-cut rules on when do I do one thing? When do I do the other thing? When do I switch? When do I hold? And then, of course, you want to make sure those rules are backed up by tons and tons and tons and tons of quantitative analysis. So you know that they're not just rules, but they're rules that are actually helpful for your trading. Because believe it or not, there are many traders that have rules, and they'll say, "Hey, Kill, what do you think of those rules?" And it'll be something kind of weird. And you guys know me as a professional trader. My philosophy is I don't like telling people they're wrong. Just because there's so many ways you can trade this market and make money. One of our clients sent me this message the other day. He said, "Akil, next time someone tells you that there's only one way to trade, give them this message," right? And I can't remember it off the top of my head, but it was a message that said, it was essentially saying, well, how many ways can you get to 6 if you're doing addition, right? 3 plus 3 equals 6, right? Is that the only way to get to 6? Well, no, you can do 5 plus 1. You could do 2 times 3. You could do 1 plus 5, right? You could do 2 plus 4, right? You could do 8 minus 2, right? There's so many combinations you can do to get to that same answer. And trading's the same way. There's no magic system. There's no magic, right? The answer is profitability, right? You want to be consistently profitable. That's the answer, right? That's the 6. How you get there, who cares? Right? You can go into the negatives, you can use multiplication, you can use division. Who cares? Get to the answer, right? You could be a fundamental trader, you could be a moving average trader, you could be an indicator trader, trend continuation, counter trend, pattern trader. Who cares? Get to the answer. There's no wrong way to trade as long as it's getting to the answer. The problem is there are some people out there that have rules-based systems, but it doesn't get to the answer. And they'll shoot me messages saying, "Hey, Akil, I got this rules-based system, right? That if-then thing you talk about, and check out my rules. Let me know what you think." And I'm like, I don't want to tell you you're wrong. I'm like, well, just curious. Was it profitable during your back testing? What's back testing? But you're paper trading right now, right? You're trading demo to try to figure it out, to practice it, right? No, live account, bro. Yeah, you should probably stop. Yeah, you should probably test it first to make sure it works. And I know many of you guys are laughing, but it's a true story. Everyone's looking for the shortcut, I feel like, these days. So you tell them that, hey, you need a rules-based system, they just create rules. They create wrong rules, but they create rules because it makes them feel justified. Yeah, I'm trading rules-based. That's only part of the process. Only part of the process. But aside from that rant, how did we get on that? That's me. That's why we have a podcast for this stuff, for rants. But yeah, so we have a bull flag, bear flag, bear flag after the break of structure. We can look for an extension down. A little bit hard to predict where we can go to here. It's not the smoothest of markets, but why would we expect the markets to be smooth? But I would anticipate a move to about 59.50s. Let me just draw some fibs on real quick. We can do a one-to-one measured move yet. We don't know when this last move is going to be made. So it's going to be hard to do a one-to-one measured move. But let me just bring some fibs on real quick. Fibonacci extension from our previous swing high to swing low, back down. That's going to give us a 127 at about 59.58. So right around that 59.50 area looks decent, and that's right around this previous structure that I was eyeballing as well. And hard to see here if we get out to the daily. That's where it first caught my attention. If we look at this line here on the daily, get this one out of here, get this blue one out of here, you can see that this is one of those structure swap areas where price action came down, right? we have consolidation right here. Price action came down, found resistance, retraced, double topped here, consolidated for a little bit, eventually broke above, resistance became support, right? So a nice little level right here. I wonder if that lines up with a fib retracement as well. Swing low to swing high. Make sure I have the right move here. Fib tools, Fibonacci extension, swing low to swing high. Yeah, look at that. You're going to see a 618 Fibonacci extension in that level as well. So a decent level for a projection here. So nice potential move here for you breakout traders. And of course, for you guys that are familiar with how to trade breakouts, there's 3 ways to trade it: the before, the during, and the after. The before would be positioning yourself before the actual break. The during would be getting involved during the breakout. And the after would be waiting for the confirmed breakout and even the potential of the retest. And all of them have their pros and their cons. And you can look at that. You can go watch the course for more information on that. But no wrong or right way to do it. It's just based off of your personality and how aggressive or conservative you are. So decent opportunity here on Euro Aussie. Let's go to its brother, Pound Aussie, who really has the opposite. So I hope you guys enjoyed this video. Before I forget, we do have the Trader Vault event coming up live in London on July 11th. It's going to be a fantastic event featuring a handful of phenomenal traders, including our very own Jason Greystone. I'll put a link in the description box below if you're interested in joining it live. If you're looking for education and maybe you can't join live, you can't fly over to London and check it out, make sure you check out our website, www.tier1trading.com. There should be a button over there that says, yes, I want free training. My advice is do this. Watch the Ascension workshop or webinar. Watch the Trade to Measure workshop. That is about 3 days plus of free education that will help your trading. Completely free, and it will do nothing but give you a better perspective of what it takes to become a trader and really get you on the right track. And there's no excuse unless you're afraid of being successful for not watching it. So check it out. I'll see you guys next week. Remember to hit that like button, share this, leave a comment, subscribe if you're new. Lastly, make sure you hit that notification bell. We do have some big announcements coming up very, very soon that I can't quite mention, but I can mention them probably in a week or so, hopefully. So you don't want to miss it. So as long as you're here, subscribe to the channel and the site, you won't. All right, take care. Enjoy the rest of your weekend. And until next time, plan your trade, trade your plan.